Sometimes knowing which company to invest in on the stock market can be a bit challenging, especially that there are a number of companies listed there and you are looking for one that's going to give you the most buck for your investment. So watch till the end and figure out how I do it. Hey beautiful people, welcome back to my channel. I am Matilda and I am so excited to have you here. On this platform, we discuss everything business, so you are right at home. Over the years of trading on the stock market, I've had my fair share of wins and losses, and I shared my experience in one of my videos. You can check it out somewhere over there if you haven't done so already. But in this video, I wanted to respond to a lot of you that have been asking me, what shares should you invest in, particularly on the stock market? That's the Lusaka stock market. And how do you know which company to invest in? So this video is dedicated to you. Now, I know that most of you want to invest in companies that will give you the most buck for your investment. You want something that's going to be profitable for you and in line with your investment goals for the next 1, 2, 3 years. And so I am going to just tell you right now that it is difficult for anybody to really tell you which company to invest in. Even your broker may not tell you which company to invest in. All we will do is just advise you on which direction to look and what to do, because buying shares is just like any other investment. It does have a risk attached to it. And so you have to be ready to make the final decision on your own. However, with knowledge, you minimize your risk. So here, I'm going to share with you 5 things you can consider before buying shares on the stock market. This will really help you minimize your risk and increase your return. So starting from the top, the 5th thing you want to consider when deciding which company to buy stocks in on the stock market is long-term strength and stability. You want to make sure that the company you want to invest in has long-term strength and stability. You don't want a company that's not stable and you're not sure if it's going to last beyond 2 years or 3 years. You want one that's going to last a pretty long time. There are 4 characteristics that such companies will have. They'll have number 1, effective leadership. Number 2, they'll have a low debt maintenance. Number 3, they're well positioned in their industry. And the 4th one is that they grow their revenue year upon year or every 2 years, but their revenue grows. So if you look out for those, you will know if a company has long-term strength and stability. The 4th thing you want to do when deciding which company to invest in on the stock market is compare this particular company to its peers in the industry. Now, you can have a particular company you're considering to invest in, compare it with other companies in that same industry. See how the company stands out. Is the company's stance in the industry something you appreciate? If so, that's a good sign for you to invest in. The 3rd thing you want to do is also know how the company treats its dividends. Does this company pay out dividends? How often does it pay out dividends? Is this a company that's investing back its profits and hardly paying out any dividends? You want to know how this company treats dividends, because if you're somebody that's looking for dividends in the near future, you want a company that pays out dividends in the near future as well. The thing you want to consider is the trends in the earnings growth. Now, this particularly means that you want to look back at this company and see how the earnings have been growing. For example, you don't want a company that hasn't been paying out or has been paying out the same amount of earnings to its shareholders for 10 years. That's not a good indicator for me. You want a company that has been growing its earnings for its shareholders over time. Even if it's small growth or marginal increments, for me, that's a positive sign, compared to a company that doesn't pay out dividends or pays out the same dividends year upon year. Now we are at 1. The first thing you want to consider when deciding which company to invest in on the stock market is the price-earnings ratio, the PE ratio. Now, this one, you have to pay close attention. Let me give you an example so that you kind of understand how this one works. And if you don't worry, I took a minute before I actually understood it myself. So let's say you have 2 companies and you're deciding which one to invest in. So let's say you have company A. The stocks of company A are going for 60 kwacha per share and the earnings per share is 2 kwacha. So to get the PE ratio for company A, you divide the stock price, which is 60 kwacha, by the earnings per share. So you get the 60 kwacha of company A and divide it by 2 kwacha, which will give you 30. Now, this means that the stock price of company A is trading at 30 times its earnings per share. I don't know if that makes sense. So let's go on to company B. So company B is selling its stocks at 10 kwacha per share, and the earnings per share is 1 kwacha. So to get the PE ratio, we divide the 10 kwacha by the 1 kwacha and we get 10. So this means that company B is trading at 10 times the earnings per share. So which company is better to invest in? Company A or company B? You are right. Company B is a better option. Number one, it's got a lower PE ratio. This means that you are paying less with company B for your kwacha in return. So company B is a better option. So you guys, those are the 5 things that I use to consider which companies to invest in, but they're not exhaustive. There's so many things you can actually consider, but these are like top 5 for me. If you like this video and you enjoyed it, please remember to share, like, and subscribe, and also comment in the comment section more questions or more ideas of what you want me to talk about or share with you next time. But thanks for watching, and I'll see you soon.